This is your LMAX exchange technical update for Thursday, May 25th, 2017. Euro-dollar. So the euro continues to remain very well supported on dips, with the market pushing to a fresh 2017 high this week and now focused on a test of the August 2016 peak at 113.67. At this point, it would take a break back below the recent support at around 11.69 to take the immediate pressure off the top side. And if we do see that, it would open the door for a short-term correction that should be supported ideally in the 110.20 area by that previous resistance turn support in favor of a higher low and continuation up towards 113.67. Ultimately, only a break back below 108.40 would compromise this constructive outlook. But for now, while the market holds above the daily low that we saw on Wednesday around 11.70, 11.69, the pressure does remain firmly on the top side with risk for a more immediate test of 113.67. If we break down back below that low that we saw on Wednesday around 11.69, it would trigger the short-term correction that could take us down to 110.20, but ultimately there would be a buy on dip strategy for most market participants looking for a higher low in favor of a continuation of gains. Sterling dollar. So cable continues to be also very well supported on dips, with this market consolidating above that previous range high at 127.75, and the focus now is on a medium-term test of the next key extension at 135 further up. If we do see any pullbacks here, the market could trade down towards even the 125 area without compromising the newly adopted constructive outlook, and only a break back below 123.60 would compromise this newly adopted bullish outlook. For now, on a short-term basis, key support comes in by yesterday's low, which comes in at 129.27. A break back below that level would be required to put the pressure on a short-term basis on the downside. Dollar yen. So dollar yen isn't giving much added color right now, with the market just chopping around following this recent round of declines off that high that we had seen at 114.37. But while the market holds below 114.37, there is risk for additional downside and for a retest of the 2017 low just ahead of 108. Euro Swiss. So Euro Swiss has recently stalled out ahead of a key psychological barrier at 110, and this keeps the pressure on the downside, with the market potentially seen rolling over back towards more meaningful range support down around the 2017 lows just ahead of 106. At the same time, if the market is able to establish a break through the 110 barrier, it would expose a fresh upside extension and force a meaningful shift in the structure, a meaningful bullish shift in the structure. Aussie dollar. So Aussie rallies continue to be very well capped, and so this latest rally that we're seeing is expected to be well capped in favor of the next lower top below the previous lower top at 76.11, in favor of the next major downside extension below recent lows that we're seeing around 73.30, which would confirm a downside extension exposing the 71.60 2016 December 2016 low. At this point, only back above 76.11 would compromise this bearish outlook. Dollar CAD. So dollar CAD is extending its recent correction, and it is a correction at this point, with the overall trend still highly constructive, and the market is looking for that next higher low in favor of a bullish resumption and break back above the 2017 high at 137.94, opening the door for a move up above psychological barriers at 140. At this point, only back below 132.20, a previous higher low, would negate the constructive outlook. Kiwi dollar. So the New Zealand dollar has rallied up over the past several sessions, but the market is now coming into some critical resistance around 71, with that high at 70.90 going back to the 21st of March, the key level to watch. If the market establishes a close above that level, it will take the immediate pressure off the downside. However, inability to establish above that level will suggest the market is looking for a topside failure ahead of a bearish resumption back down below the recent 2017 low at 68.18 and towards next key psychological barriers at 65 further down. SPX 500. The S&P 500 has broken up to another fresh record high, and this break now suggests that we could be on the verge of the next major upside extension, exposing a measured move objective at 2480 further up. 2480 is an 80-point objective following an 80-point consolidation that we had seen earlier this year between 24 and 2320. At this point, it would take a break back below 2320 or 2322 as we have it here to officially force a shift in the structure. Gold. So gold continues with its run of higher lows and higher highs, most recently being supported at 12.15 or in that area. And that support now opens the door for this next major upside extension, which will be confirmed on a break back above the 2017 high at 12.96, exposing a move towards the 2016 peak at 13.75 further up. Only back below this recent low area, the 12.15 area, would compromise the constructive outlook.